In this video, we are going to be analysing Best Buy, ticker BBY. Now, they are up over 10% as we're recording this video, which is around 2:40 PM market time. Now, firstly, why is it up so much? So they did just have their earnings. And again, obviously, this was taken well. Big increase in price and even into the open. Again, this is usually the key thing to watch recently. We've been seeing them have earnings, they gap up, or gap down, say 5-10%. But as soon as market opens, they tend to reverse. We saw it on Alibaba recently. And that's why I was a bit more hesitant coming into the Best Buy play because I didn't know if it would react the same. But it was nice to see. Markets opened and it was able to kind of stabilize the price and actually keep pushing up that bit more. So good indication that BBY is more bullish. But what do we need to pay attention to then going further? So what was good to see today, we broke through $73.50 as well as $76.50. Now these are our two first deviations on both the 6 month and the 1 year. So this is our first heavy layer of resistance. What was quite nice is we did test this before and obviously we've got that pullback play that we would usually look for. But now it's tested it for that second time. It's a better indication that we will break it and push to that next level. So all we're looking for today is if we can hold and kind of close above $76.50, which as of right now seems more than likely. That is a good indication, a good bullish indicator. And what would our targets be if we continue to be bullish? So as of right now, our closest resistance is $84.25. That's going to be our closest resistance and our target. If we break further, we're looking at $91.25 and going on to $95. If we break through here, 105.50. Now this is going to be a very strong level. Why is it? Again, we got our fourth deviation on the 6 month as well as our third deviation on the 1 year chart. Whenever you have two standard deviations, I mean literally to the point on accuracy being the same, but even if they're within a 50-cent range, they become very, very strong because again, algorithms are triggering around this level. And when you have two, whether they're looking at a 6 month, whether they're looking at a 1 year, whether they're looking at both, again, this is going to be a heavy layer. Again, be watching for it. That level is, if we could push that high, would provide really good trading opportunities. And whenever I see that, again, always something I increase size on. Just between those as well, obviously be paying attention to $100. Not a technical level in the sense of it's a deviation level, but obviously a big psychological level. $100 are always hard to break. Either side, whether you're above it or below it. So again, just always be paying attention to that. 100 is always going to be an important level. And we do have one final resistance at $120. Now, on the other hand, if we start to sell off, what are key supports? So we do have supports at $62.25 slash kind of 50 cents. Now, this is statistical mean on both the 6 month and the 1 year. And if you watch our other videos, we always say, statistical mean isn't a level we look to trade from, but a level that we look to trade to. And the reason for that is, what is statistical mean? It is considered a fair value. So if we're using, well, as in this case, standard deviation, it is a mean reversion strategy. So we want to play the reversion to the mean. And that's why if we come into $84, again, that's when I flip more bearish. And where would my overall kind of final target be? $62.50, because again, that is considered fair value. Once you hit that level, it's a bit more of a gamble in the direction that we're going to go, because you're not really paying any premium from it from either the upside or downside. So that's going to be our final target. But if we break here and we start breaking down to the $52 and $47.50, now this is where I would turn more bullish on it. If I'm looking to take the position long, this is where I'm going to do it, because again, then we have some good upside. We can get some good risk to reward. Taking long bias above here, unless you're waiting for those good confirmations, again, breaking above a level, coming back to test it as a support, having a tight stop, quite a wide upside, that's the only other time you're going to get some good risk to rewards. Now, if we break further, again, we're then looking at $41, then $33, going down to $30, and a final level at $19. Again, $19, again, unlikely that we push that low, even if markets continue weak. But if for any reason we did push that low, again, fourth deviation on the 6 month, third deviation on the 1 year, going to be a very strong level if we came into here. Definitely something I would be taking quite heavy long bias. Anyway, that is the breakdown on Best Buy. If you did enjoy the video, why not drop a like and subscribe and check out one of these two analysis videos.